Welcome, everybody. Good morning, good afternoon, or good evening, wherever you may be. I'm sorry, we're all sorry for the slight delay due to some technical difficulties, but we're very glad we could continue or have the webinar now. I hope everybody is staying well. My name, as you probably know, is Stephen Applebaum, and I am the managing partner at Insurance Solutions Group. I'll be moderating today's discussion. I'll also be moderating many of the sessions at the upcoming conference, which I'll mention later. We really have an expert panel here to discuss the subject of doing more with less in claims. And I don't want to dwell on the pandemic, since we get plenty enough of that all day, every day. But I would like to comment that relative to the insurance industry, and specifically insurance claims, I strongly believe that the impact on our business from this crisis will last long after the recovery, and that we may well, during this discussion today, want to comment, or we may have questions that are relevant on that today and in our future webcasts. As many of you know, today's webinar is presented as the third in a series of special events in the run-up to Connected Claims USA, which is being held on June 24th and 25th in Chicago at McCormick Place. It will be the world's largest gathering of claims executives. And the only proper way to summarize it is to let you know some metrics. There will be over 150 speakers, more than 120 exhibitors, 100% of top 20 carriers are represented, over 100 case studies will be presented, and we'll have 6 stages operating simultaneously. It's an unprecedented speaker faculty, and most of today's presenters will be included in the faculty at the conference. So with that, just before I introduce today's panelists, just some light housekeeping notes. Each speaker will make comments for approximately 5 or 6 minutes. I may ask a continuing question or two from each of them at the end of their segment. And that should bring us to about the 30-minute mark, at which time we'll spend the rest of our hour with Q&A. It's often the most interesting and productive part of these webinars. And questions can be submitted at any time through the chat window that you all have on your platform, and we'll answer them during the Q&A period, and I'll be moderating those as well. So with that said, I don't want to waste any more valuable time hearing my own voice, because we want to give time to all these great folks. You can see that we have Jeanette Ward, who is the Chief Operating Officer at Texas Mutual, Don Jones, Head of Claims at Mass Mutual, Jeff Branch, AVP Special Investigations with Swiss Re, and Kedar Kamalpakur, Claims Operations Transformation Leader at Deloitte Consulting. And I should mention that today's webinar is sponsored by Deloitte, as is the conference itself, and we all appreciate that. These are the things that make these types of events and this information possible. So welcome to all. I will provide brief bios as background and context for each of the speakers' remarks to help us understand where they're coming from, what their responsibilities are. And with that, I think we can get started. And Jeanette, I'm going to introduce you first. I'm going to introduce Kedar first. So Kedar is Deloitte's Claims Operations Transformation Leader, specializing in leading large-scale business-led technology-enabled transformation programs. His claims work includes operating model design and execution, claims operational excellence, delivering improved customer experience and cost of delivery, and core system technology implementation. Kedar serves many of the top 10 insurers in Europe and in the United States across multiple lines of business, including personal and commercial auto, homeowners, workers' compensation, general liability, aerospace, marine, and other specialty lines. He has over 11 years of experience in the insurance industry, including as a claims adjuster for a leading U.S. property and casualty insurer, and is a chartered property and casualty underwriter. Kedar, welcome. Please share your comments.
Thank you for that very nice introduction, Stephen. And hello, everybody. I really appreciate the opportunity to take part in this panel. I'm looking forward to the conversation. And we as Deloitte appreciated the opportunity to sponsor it. I'm going to start with the market context. Claims organizations are under more pressure now than ever before. And this is driven by ongoing margin pressures, increased volatility in claims frequency and severity, rapidly changing customer preferences that have a significant impact on policyholder retention. And most recently, although I'll try to keep my remarks on COVID-19 brief, it's an important one now because ultimately the impacts are unclear. But anecdotally, we're hearing that auto claims are down, but property claims are starting to tick up as people drive less and spend more time at home. This shift is going to require claims departments to immediately change to a more virtual claims assessment in many cases and seek to make their monoline adjusters more flexible to other lines in the short term. The traditional way of dealing with these types of challenges has been one-off investments in solutions like RPA, robotic process automation, for specific processes. For example, maybe pulling in policy information into the claims system, which is helpful, but doesn't significantly alter the overall cycle time or the cost to deliver services. Alternatively, they've invested in costly, large-scale, multi-year transformations, which failed to deliver the anticipated benefits the majority of the time. These transformations have failed for four primary reasons. First, insurers have recreated old processes and new systems, which means that really all they're doing is taking an inefficient process and doing it a little bit faster. Two, they struggled to standardize processes in a way that would enable maximum reuse of the automation or analytics solutions that they're using. This means the return on investment is low. It also challenges the ability to scale up these one-off projects. Third, they customize systems in a way that make it difficult or costly to take advantage of the latest versions. This means that by the time the implementation is complete, sometimes that technology is already out of date. And finally, and perhaps most importantly, they do not fully consider the moments that matter the most to customers in designing the processes or in selecting the technology they're going to use. This last point is particularly critical as according to the latest J.D. Power survey, the insurers with the highest customer satisfaction scores were driven by insurers who had the ability to clearly articulate the progress of the claim in the way the customer wants, settling the claim in a timely fashion, and providing transparency to the customer about the fairness of the settlement that they're receiving. Over the last 24 months, we've seen a shift towards more agile transformations, which have proven to be more successful. These transformations are focused on using claims professionals for the most customer-impacting activities, while leveraging external partners to provide enabling analytics or artificial intelligence solutions to better support claim outcomes or deliver claim services at a lower cost. Some specific examples that I'd call out from leading insurers that I see include the use of video FNOL to capture the majority of the required information in the first interaction or to conduct first call settlements, leveraging artificial intelligence to develop initial estimates for auto property damage claims that can save up to 50% of the adjuster's time as they first look at claims, and leveraging smart outsourcing partners who not only deliver transactional processes for less, like perhaps payment processing, but contractually obligate themselves to building in the automation or AI tools that an insurer would own at the end of the contract period. Now back to the topic at hand. As Stephen mentioned at the start of the webinar, we're going to be talking about strategic investment in technology as it relates to ethanol, adjuster enabling tools, and analytics, all of which help you do more with less. But as you walk away from this session and start to think about how you're going to potentially implement the things we're talking about today in your own claims department, here are a few successful factors that we like to put with our partners. First, define a claim strategy and determine the capabilities that you're going to need to enable it. For one company, the key to reducing cycle times might be enabling automated segmentation. For another, it might be fraud analytics. Two, build an execution roadmap that prioritizes the most important touch points for the customer and also considers your investment appetite. Not all investments need to be large, and you may invest in individual solutions that fill a particular capability gap, such as enabling an enabling app to capture photographs to support desktop adjusting. Third, pilot and fail fast. Because not every solution that you go to implement is going to deliver the anticipated results. Sometimes the solutions that your partner provides don't meet your needs, and that's okay. But it's better to move on before spending too much time or money on a single solution that doesn't deliver the needs you have. And finally, regularly reevaluate your required capability set to ensure it still meets your market and customer needs. This should be something that's a living document that's updated from time to time. In our experience, all four of these elements are critical for claims organizations to be successful at delivering more for less. With that, I'll turn it back to Stephen.
Thanks, Kedar. You said enough there to probably support a 3-hour webinar just on the topics you've raised. So this is going to be interesting. I know we're going to get a ton of Q&A coming out of your comments. Thank you very much.
Yeah, of course, sir.
Thank you. I'm going to turn to ask Jeanette Ward to make her comments, but let me share some background by way of an introduction. Jeanette is, as you can see, the Chief Operating Officer at Texas Mutual Insurance Company. We've been fortunate enough to have Jeanette present and work with us at conferences in the past, and she is a really interesting, delightful presenter. Jeanette joined Texas Mutual in 1993 after earning her degree from the University of Texas. She has since accumulated 26 years of valuable experience serving in a variety of roles, ranging from strategic planning to overseeing claims, safety, and medical network operations. As COO, Jeanette is responsible for all insurance operations and IT. She lends her time and her talent to several charitable organizations, frequently speaks at industry events, was named a 2018 Woman to Watch by Business Insurance, which recognizes women leaders in risk management, and recently named an executive to watch in 2020 by Risk and Insurance magazine. Hello again, Jeanette, and welcome.
Hi, Stephen. Thank you. I'm really happy to be here today and look forward to hopefully seeing everyone in Chicago in June. And I hope everyone's staying safe and well during this time period. So Kedar spoke about a lot of things that we're doing and thinking about at Texas Mutual. And so specifically, I want to talk about the what, how, and why in my opening remarks. So the what is the whole industry would be remiss if we did not utilize and take advantage of all the rapid advances in technology and advanced analytics that are out there for us to take advantage of. I have a dream. I've had this dream for a couple of years on the claim side. I see an opportunity to really transform the whole way claims operations typically work. If you think about it, we're on sort of been traditionally on a diary or driven by activities. Something happens, an adjuster goes in and sets a diary. They go back and check and see, has something happened that makes me now take action? Or pieces of mail come in and it's all just driven by activities. There's such an incredible opportunity to have the machine, the systems, read through all the documents that are coming in, read through the history and the claim file, take what typically happens in a claim through machine learning algorithms, combine that with external data to then point and drive the adjuster to focus where they need to in real time as things are occurring. Completely changes the way you manage claims, but it's a much more efficient use of the adjuster's time. Their expertise is still needed, but the machine can do the work of reading through all of the information and creating indicators for adjusters to look at. So that's my long-term dream. In the meantime, we've begun realizing that through just taking the data that's available at the beginning of a claim, at first notice, looking back from a machine learning perspective on what's happened on similar claims in the past using our data to more accurately identify the severity of that claim and which level of adjuster it needs to go to. And then creating processes around what requires a lot of touch versus what requires very little touch. So we were really happy to implement that new model last year, and we've seen quite a lot of efficiencies through that. So that's the what, taking advantage of all the technology and the data and the opportunities to really transform and make better use of our time. The how, Kedar also touched on this, is we did it through agility. Insurance companies traditionally can be very risk adverse and slow to adapt to change. And we thought it was really important to make a complete transformation to become a much more agile and responsive company, willing to take risk, willing to learn and adjust. And so we've successfully also transformed from the agility perspective. And why? At the end of the day, part of my vision and my dream for our operation is we have these incredible claim professionals, and I want to free up their time so they can do what they do best. We serve injured workers in Texas, and I want our human resources to provide the best and more personalized service, more connection with our injured workers, helping them get the help they need. So that's what we're doing at Texas Mutual and what I wanted to share today.
Thanks very much, Jeanette, and I'm sure we're going to get a lot of questions following up on your comments and your expertise, particularly in and around workers' compensation, which is a more interesting topic than ever these days. Our next presenter is Don Jones, and I would like to share some background on Don before I introduce him. He is the head of claims for Mass Mutual, as you can see, and also head of insurance operations, leading the charge to achieve their vision of becoming a digitally enabled organization with richer customer data, streamlined processes, and automation to pay claims faster, more accurately, and provide service on the customer's terms. Don has more than 25 years experience in the industry, including almost 2 decades in claims leadership. Most recently, Don provided private claims consulting to a wide range of clients, and prior to that, he spent many years with Nationwide Insurance in senior leadership roles of increasing scope and responsibility for the firm's property and casualty claims organization. Over his career, Don has specialized in setting strategic direction and executing key business transformation initiatives, including technology adoption and digitization, as well as process optimization, automation, and continuous improvement solutions. Welcome, Don.
Thank you, Stephen, and good morning, everybody. Hopefully everybody can hear me okay. Great to be with you all, and I want to echo Jeanette's comments. I'm hoping everybody is safe and healthy during these unprecedented times, and making sure that you take care of your family and loved ones. Great to be here again, and I just wanted to really just share some really highlights in terms of what we're doing at Mass Mutual from a strategic standpoint. And, you know, I think the first 2 presenters kind of nailed it well in terms of, you know, this transformative journey that we're all on in the claims industry, quite frankly, the insurance industry. And at Mass Mutual, I just wanted to share real quickly how this kind of ties into our conversation today. You know, our strategy, we've just kind of really been focused very hard on our strategy and how that's going to evolve over the next several years. We're really focused on our transformative journey and transforming the claims value proposition, and how that's really going to embrace a purpose-driven claims approach, and how we really meet our customers' expectations now and well into the future. And really quickly, I just wanted to share our vision at Mass Mutual, our claims vision, and really it's just to deliver a personalized and exceptional claims experience when it matters most. And, you know, we feel that our value as an organization, as a business unit here within insurance operation, is just to be a highly adaptable team where we can utilize process improvements, data and technology solutions that's going to meet our customers' evolving and changing needs. When you think about our industry in the changing world that we're in today, it just really requires a new set of thinking about insurance claims and, quite frankly, insurance overall. You know, traditionally, there's always been a tension between, in my opinion, the customer experience and claim costs, as I've kind of, you know, come up through my career, and there were certain trade-offs. And you know, as we think about the future, you know, my perspective, I think we have to really be, you know, balanced in our approach in terms of, you know, delivering a delightful customer experience and meeting their expectations, and also managing operational efficiency where we can be the most effective and efficient for our customers and our business partners and those that we serve. You know, so when we talk about customer expectations, I think we all can understand that, you know, these expectations are rising and changing fast, and they're really being driven by what I like to describe as the digital bellwethers out there, you know, the Amazons, the Googles, and the companies that quite candidly don't look like us, and banks and retailers and the like. And, you know, as we all know, today's customers expect seamless digital experiences, and they expect the firms that they do business with to really understand them and to deliver products and services that are really tailored to meet their needs and their expectations. So I think, within claims, we really have to kind of look at three, main areas. Obviously, the customer expectations, and also maybe having a deeper lens and insights into, market efficiencies and how they're shifting over time. When you look at our markets and you look at, certain segments of the insurance industry, I do have a deep background in the P&C industry, and now it's over in the, the life and the health and the disability segment of the insurance sector. But there's a lot of crossover, obviously. We all have the same challenges and the same goals that we're trying to achieve. But when you look at, some of the losses that we've incurred, that we've experienced over time, sometimes those losses can really outpace premium growth in certain years. And in some product lines, claims continue to grow more frequent and severe. And I know that can be particularly the case in property and casualty. So I think, it's always, our ability to really just kind of manage those pressures where we have to become more efficient, where we have to reduce operational costs, and at the same time, manage our resources to the best of our ability. And I think the other thing is, really keeping a keen eye on technology and innovation. The world, again, is continuing to change at light speed. We have a lot of the tech giants and nimble insurtech companies that are out there that are really disrupting our industry in a big way and are introducing solutions that really are fundamentally altering the landscape that we kind of navigate through today and also probably for years to come. And I think it's really important that we just continue to manage, really go from a modular infrastructure to really being an organization where we're using data. We have advanced analytics and advanced technologies that will allow us to really be forward thinking in terms of our approach to being a purpose-driven claims organization. And I think if we can use these new tools and technologies and leverage them as a way to rethink how we're rebuilding that claims value proposition, I think we will always be in a strong position to, operate and deliver that exceptional customer experience, being more efficient for our customers and for our associates, and really meeting market demand. So I really believe it just, takes having a balanced, purpose-driven approach and having the ability to use many different tools within our tool belt that will allow us to really transform the customer experience and also the claims value proposition, and being a competitive advantage for our companies and for our business partners and for our customers. So with that, Stephen, I'll kind of end my comments there, and I look forward to the rest of the discussion. Thank you.
Thanks, Don. Wonderful that you could round this out to include now life, health, and disability, as well as comments reflecting your prior experience in P&C. That's going to really help our audience in terms of questions. We're covering all the bases here. Our fourth presenter is Jeffrey Branch. And as you can see, Jeffrey is AVP of Special Investigations with Swiss Re. And I will say that if there's any area of insurance claims that resource constraint is a constant issue, I suspect we're going to hear from Jeffrey that it is definitely SIU or Special Investigations. But let me share some background first on Jeffrey. He is, as we've said, the senior investigator with the SIU of Swiss Re Corporate Solutions, where he's responsible for external fraud investigations, as well as serves as the anti-fraud awareness training coordinator. Prior to joining Swiss Re, he spent 20 years as a law enforcement officer, 16 of which were with the Florida Department of Financial Services Division of Insurance Fraud, where he served in many capacities, conducting, supervising, and managing criminal investigations for that division. While with the division, Jeff specialized in complex white-collar crime investigations, including premium avoidance, money laundering, racketeering, and other organizational financial crime schemes. Jeff earned a Bachelor of Science degree in Criminal Justice from Florida Atlantic University and a Master of Science degree in Criminal Justice Administration from Lynn University. He is the former chairperson of the Florida Property and Casualty Insurance Fraud Task Force, as well as the Florida Workers' Compensation Insurance Fraud Task Force. Jeff holds a Certified Fraud Examiner designation and most recently participated in the Florida Executive Development Seminar. Jeffrey, welcome. We're looking forward to your comments.
Well, thank you very much, Stephen, and thank you all for joining us in these what is our new reality of times. And I hope that everybody's prioritizing that. But we are thrilled that you could join us here today, and I'm thrilled because I get to interject a Special Investigations Unit perspective to the issue about managing more with less resources. So I really have two main points. The first one is going to add more work to someone's plate, and then the second one hopefully is going to take all that work off their plate. And that's how we manage our resources. So the first thing is we can't ignore the fraud component in claims. It has to be a philosophy from the top down that it exists, it affects our bottom line, and thus, even though it creates more work for us, it can't be ignored. If it's a philosophy from the top down in an organization, you have directors and managers that are encouraging fraud awareness training. So you're asking your claims folks to do more. We want you to be more aware of what's going on out there. Aside from what you're doing, we want you to be looking for red flag indicators of fraud and things like that. I think the directors and the managers also need to encourage routine interaction with SIU, maybe not on a specific claim, but on a potential hypothetical situation that may arise. And what that does is it generates more of a cohesive relationship with what many times is SIU is viewed as a standalone. They're reached out to, they do some stuff and they go back. We're trying to make this more of a cohesive relationship where SIU is embedded in the claims function. And the other thing is that a lot of times people hear the F word, the fraud word. Oh, well, we don't want to talk about that. Well, not only do we need to talk about that, we're being told that we need to talk about that by regulators who are now looking to see what carriers are doing to protect their constituents from fraud. So even if we wanted to ignore it, we'd be reminded by the regulators in the various states that if you don't do it, we're going to be coming and talking to you about it. So that's the first piece. We've got to embrace it. It exists. There are people out there that seek to take advantage of carriers who are not looking out for fraud. There's individuals and there's groups. Can't be ignored. That's the biggest part. We have to accept it as a philosophy that we're going to do that. All right, so now that we've accepted that, we've told our claims handlers and our adjusters, okay, this is what you're going to have to do, this additional stuff. Well, that's not going to solve the problem. So what we want to do is we want to take the analytics and we want to take the machine learning that the others are talking about, and we want to place something on top of our claims system. We want to take the need for them to be going line by line. Jeanette mentioned that you get a piece of paper in, you look at it and say, oh, what does this mean for me now? We want to take that away. And also, as she said, point the adjuster in the right direction without them having to really do anything. If we put a red flag indicator analytics program on top of our claim system, then when a claim handler, an adjuster, or a manager sits down at their desk, right now they sit down at their desk at home, but when they sit down at their desk, they're not looking to see if there's a red flag indicator that needs to be referred, but rather they're told that a claim came in overnight, it was screened by the analytics tool, and it's already been sent to SIU for review. Now, just as an anecdotal example, I heard a presentation in Florida last year where a director of SIU said 60% of their referrals to SIU are completely automated. That is, the claim handler only knows that it came to SIU when they're told that it came to SIU because the analytics program did that. Someone's saying that they can't hear me. Can everyone hear me okay? Someone's saying that they lost my audio. Everybody hear me okay still? Steve,
I hear you fine.
Okay.
Jeffrey, I hear you fine.
Okay, it might be an individual then. I just got the ping that someone said they lost my audio. Anyway, so all right, so what I was saying is we're going to take what we're asking the claim handlers to do and identify fraud, and we're going to put it into an analytics system that does it for them. And what that allows is it allows us, the SIU, to get another look at it. And the other thing everyone has to understand is a successful SIU investigation doesn't mean we found fraud. A successful SIU investigation means that we helped whoever was struggling with some issue, some component of some claim. If there's a question, we may be able to alleviate that question by saying, oh, this is an anomaly, it's an outlier, it's not a fraud, go back to doing whatever you were doing. But it allows a second set of eyes to look at something that might be a fraud. So those are the two big things from an SIU perspective. One, we can't let it go by the wayside because we're being pressed on resources. We've got to embrace it as a philosophy. And if we're going to do that, we've got to give the claim handlers, the directors and managers the tools so they don't get overburdened with what we're asking them to do. It's going to be done for them. They're going to be aware of it because it's a philosophy, but it's going to be done for them. And then the first they're going to hear is us, SIU, contacting them and saying, hey, we might be able to help you with X, Y, or Z. So, Stephen, those are really the two big points that I wanted to make.
Thanks very much, Jeff. This is a good time for me to remind everybody to submit your questions in the chat box. We've got a bunch already, and we're glad to take as many and answer as many as we can. I'd like to take the privilege of having the microphone for the moment to ask Jeffrey a question because he just finished his comments and it's fresh in our minds. Jeff, I've often wondered about the counterintuitive nature of identifying potential fraud, making referrals to SIU, and the resource constraint. And let me explain what I mean. As we get better and better, as technology helps us to get better at identifying potential fraud, which increases the number of referrals, at some point, do resources come into play in terms of SIU resources? Because there's some point at which you just can't look at every potentially fraudulent claim. How do companies strike the balance now that technology is helping identify more than ever?
Well, I think it's a multi-tiered approach, and it really depends on the philosophy of the carrier. Now, we've seen an ebb and flow of a massive increase in additions to special investigations units, and then in other circumstances, we've seen the decrease in numbers of people that are doing what we do. I think the happy medium is, and the term is most used is sort of a desktop investigation. So you have resources that you can help your claims handlers and folks directly from your desk. That is databases, things of that nature. But you're right. The more that come in, the more you're going to have to do. And so I think the balance is that you find yourself a panel of vendors who are geographically spread around where you are, and they're doing the things that you need to do. Obviously, you vet them. Obviously, if you're going to bring them on as a panel vendor, then you're going to expect that you get some preferential rates and things of that nature. But I think that's where you're going to see more of an expansion versus adding and adding and adding bodies to internal SIU units. You may see a slight increase there. I think you're going to see more networking with vendor partners out there who are right where the claim happened, can get there in 10 seconds. I'm exaggerating, but can get right there, can do it, can get your statement, can get your photos, can do whatever, get it back to you, can get it back to your claim handler, and then you've completed that process. So I hope that answers your question. I think you're going to see a more broadening of networks with vendors who are where you need them to be at the time you need them to be there.
Thanks very much. I think we'll probably hear more about that. I'm going to turn it now over to the audience and start referring some of the questions we're getting back out to panelists. So I'll read the question out, and then I'll ask each of you, or whichever of you is applicable, to respond if you are able and willing. So first one, insurers have been somewhat slow. I'm sorry, I have to read this line at a time. Insurers have been somewhat slow to adopt AI technologies and claims automation. But as Kedar said, J.D. Power ranks the best insurers, those that provide transparency in the claims lifecycle for the consumer. So the question is, does the panel believe that we are at a tipping point for AI-based claims solutions, or is the industry still playing catch-up to other fintech centers? For no particular reason, Jeanette, I'll ask if you would comment first.
Yeah, so I'm of the belief that we have to take advantage of the technology. We have to utilize AI. I'm also of the belief that claim handling, the reason that insurance exists is you're helping people on their worst days, as often said, and it's still going to be important for it to be human to human interaction. And where the way I'm thinking of using technology is you're enhancing that human interaction. Now, I know there are carriers out there that resolve claims completely with chat bots, and that may be appropriate for certain types of insurance in the workers' comp space. Someone's hurt, someone's injured, an employer has lost an employee. I just think that human aspect is critical to remain in the process, and the technology enhances our ability to serve people. So that's the way I'm looking at using it. I think it'll accelerate our ability to provide that human service better. So in the robot versus human battle that's to come, I'm team human augmented by the robot, if that makes sense. So that's my 2 cents.
Thanks so much. Don, I'm going to turn to you next, but it was really, as I look at it again, a multi-part question, could be taken many ways, including transparency, the use of AI, and where we stand relative to financial services brothers and sisters in the industry. You want to take it on any way you like?
Yeah, thank you, Stephen. Great question. I do think, from my perspective, I do think as an industry that, for a time we were playing a little bit of catch up in that space with AI and technology of the like. But I do think that since we're focused right now, and I think we're having a deeper understanding as time goes on, as we get more research and more data into the technologies, how it can help our business and how it can help the claims life cycle. For me, it's about, I think I want to echo Jeanette's comments, it's about kind of balancing and using those tools, I should say, those technologies very strategically. There are some things that just requires the human intervention, the human touch. And I think, anytime we have the ability to, inject automation into our claims processes where we can reduce and limit or mitigate or just remove those manual tasks from our associates and our adjusters' desk and their responsibilities, we should be doing that. But at the same time, using that technology very strategically. So for me, it's really just making sure that, our business model, for me, I'll just speak for my organization, just making sure that the maturity of our business model is where it needs to be so that we can take those opportunities and leverage those advantages with AI in the most, I would say, effective way. I think sometimes you can try to run too fast and try to leverage technologies like AI and machine learning and other things, robotics, et cetera, and really not have an understanding in terms of that maturity curve of your organization and your business model. So I think that's first and foremost very important. But for me, it's also just about really leveraging technology and balancing it with empathy, because there are various aspects of the claims life cycle and the customer experience during a claim where, technology just can't really fill the void and really, deliver on the promise that we make to our customers and consumers every day when it matters most at the time of claim. So I think it's a point, and it's a matter of using it very strategically, deliberately, and just understanding and having a deep, insight into the maturity of your organization, where it's at and where you're trying to take it.
Thanks so much. Jeff, from the point of view, which is a unique point of view of, SIU Investigations from a reinsurance perspective, do you have any comments on any aspect of that question?
Well, yeah, a couple. And first, we do have a lot of first party claims. So we do have $1 business too. So although the larger group is reinsurance, we operate in the first level of protection arena. I will say from a special investigations unit perspective, the reason why there's been some hesitancy, I don't want to say resistance, there's been some hesitancy, and this goes back 10 or 15 years when the analytics catchphrases started popping up, and I was still working for the state, and these vendors were coming with a one-size-fits-all for everything. Oh, here's your analytics programs, can do everything for you. Well, it doesn't work that way. If you're focusing on a workers' compensation, potential workers' compensation fraud issue, you may want an analytics program that says, hey, per capita, there's more claims that come in from this geographical area and these 10 medical providers than similar places. So maybe we got a provider issue there. That's not going to help you if you're investigating organized stage accidents or some type of PIP fraud. So you can't just, and then so I think that's why there's a hesitancy. We have been shopping. We're on a shopping trip right now. And there are tons of people out there that are now seeing that, and they're saying, listen, based on the line of business that these carriers are doing, you've got to tailor something that's a red flag indicator for that line of business. And I think that probably slowed us down a little bit because the first products that were coming out were designed to be a one-size-fits-all, and it just doesn't work that way in the SIU arena.
Thanks, yeah, and thanks for clarifying that you do first-party business as well. Kedar, you've got a very broad view of the question in terms of the use of AI and technology in general, catch up between insurance and banking. Would you like to share any comments on any of that?
Yeah, in part, I want to echo some of the things that we heard earlier, right? The type of claim really matters, and some lines of business are more prone to this type of automation than others. For example, there's a personal line carrier in the Netherlands that's seeing straight-through processing rates of up to 70%. Are they going to be able to do that at scale? Probably not. But being able to use technology to drive out the transactional pieces like Don was mentioning, and also enabling adjusters to make the right decisions is really the sweet spot. And I think it's all about making sure you're looking at the end-to-end customer experience, because there's two things to this, right? You want to make sure everything you're doing is accretive to your customer and making sure you're showing partnership at the moment that matters the most, but at the same time be able to flatten the cost curve. And I think the reason that insurers are a little bit behind banking is because there's a lot of variety in product, of course, but you also don't necessarily want your insurer to be the first one to try something that could be risky. And so I think you're striking this balance on a continuous basis.
Thanks so much. I've got a question and a comment addressed or directed to you, Jeanette, so here we go. Hi, Jeanette. Congratulations for the transformation journey Texas Mutual has embarked on. Can you please talk more on the technology you are using to read through claim documents and get machine learning to assign it to, excuse me, everybody, I can only see one line at a time for some reason, and assign it to the adjusters, and how much of the automation you could achieve with this technology?
Yeah, that's a great question. So just to clarify my earlier comment, I have a dream and a vision. We've only implemented a small part of it. We're on our journey. So ultimately, we will have the ability to read through all of our imaged claim documents and utilize that data. We're not quite there yet, but on the front end, in terms of looking at the first notice of loss data, we actually partnered with a company called Data Robot to help us with those algorithms. It's I hope people aren't insulted by this, but I affectionately refer to it as data scientist in a box, where you have access, instead of hiring a data scientist or hiring 4 or 5 data scientists, and every data scientist is going to approach these advanced algorithms in a different manner. You're actually able to access thousands of different advanced algorithms built by many different data scientists, and you can test the different algorithms out using your data and determine the ones that work best for you. So we really enjoyed that partnership, and that really accelerated us, and we were able to implement that claims model in a very short amount of time last year. We're putting a bit of a pause on that. Do some fundamental system foundational kind of older technology. We're needing to switch it out, but as soon as we get that done, we'll move to the next phase of realizing the vision of being able to really look at all of the data elements, all of the unstructured data. That's sort of our next step in the process.
Thank you. Oh, some major feedback coming in from somebody. Just a reminder for panelists to mute their phones when not speaking. Thank you. I'm going to go to the next question, which is, can you, and we'll have to decide who can answer this. Can you share how new payment modalities are being used in claims payments? Texas Mutual and Mass Mutual, are you using electronic payments such as direct to debit like Zelle or e-checks, etc., for payments? Please share your insights. So why don't we give Jeanette a rest and ask Don to start?
Great question. So obviously, we're looking at technology like that and possibilities like that to really streamline the claims process. But we're doing a lot right now, obviously, with EFT, and I'm sure everybody is as well. And we certainly have, digital claim payments on our radar, but we're not doing it right now. We are having, some light preliminary conversations, with certain vendors who have reached out just to kind of, look into those possibilities and building those capabilities into our claims process, because I do believe, obviously, it gives us the ability to, provide that seamless, efficient claims experience that we're all chasing. So I guess, the short answer is we don't have it today, but it's certainly kind of, in our view, and it's on our roadmap at some point. We're really trying to tackle some other, possibilities and capabilities with advanced technologies and process efficiencies. And, we do a lot of problem solving at Mass Mutual within insurance operations that includes things like that. But that's certainly on our strategic roadmap. We'd like to do it, sooner rather than later, but we're just really in a position where we're trying to prioritize some of the things that we're going after right now because, we just want to make sure that we have the capacity, obviously, to achieve all of these things in a meaningful way. So I definitely see the value in it, and hopefully we can get after some things like that relatively soon.
Thank you, Don. And before I ask Jeanette the same question, Kedar, does your practice and is your expertise seeing do you have any comments to share about adoption of payment technologies in claims specifically?
Yep. So, if you asked me this question even 12 months ago, I think there is the cursory inquiry about, okay, how can we be more efficient in making our payments? But the challenge had always been that it's actually the insureds who didn't always want to take it. They wanted to have a check. And I think what you're seeing now, if you haven't answered this question today, is the shift in that, where people do want to have multiple payment options, whether it's Zelle or something else. And the number of tools that are out there has really exploded. So I think we're already starting to see this movement. I think it's going to happen more. The question ends up being, how fast are insurers able to move to be able to enable it?
I must add, from a personal point of view, I've long wondered, like 30 years long, wondered why insurance carriers weren't interested in converting a $25 expense function to a 25-cent expense function. But I think we're getting there now. And with that, I'll ask Jeanette about the adoption, if any, of electronic commerce and payment and claims at Texas Mutual.
Yeah, I would say we're much along the same lines as Don in terms of ACH, primarily checks. But to Kedar's point, you'd be surprised at how many claimants actually prefer the check. It's still a thing, although we have taken advantage of this time period and have been able to convert a lot of check payment into electronic just in the last couple of weeks. We're able to use this time period to convince people it's going to be more efficient and effective, and folks are adopting it. But much like Don, on our roadmap, we want to be prepared in the future. When I say we're doing a lot of foundational things, I'm talking integration layers, ability to talk in and outside of our company electronically and digitally with external partners. We want to lay a strong groundwork for being able to do that and adapting quickly as preferences change, as technologies change. So that's kind of our focus right now, to get ready for that.
Thanks, Jeanette. Jeffrey, I want to turn it to you with a kind of a different perspective. Do electronic payments in claims present any new, different, or additional fraud risks from your point of view? How might they impact SIU activities going forward as adoption increases?
Yeah, well, okay. So thanks for the question and for the redirect. So there's a couple things. Some are direct and some are tangentially related to electronic payments. So I don't want to speak for what our operations people do, because it's amazing that they can do what they do with the group that they have in a worldwide organization like we are. But we do talk about things like low touch and no touch. And whenever an SIU person hears those terms, while they obviously speed up things because a lot of stuff is automated and a lot of stuff is just being done, we then have the question, well, who's really looking that closely at it then if it's just automatically being done? So from a payment perspective, that perspective would be if something's getting paid electronically, automatically, low touch, no touch, and no one really got to get a good 2 or 4 eye look at it, that would be a concern. So as we see that going forward, we would want whatever system we put on top of our regular claims programs that are keeping track of our claims handlers and what they're doing, we'd want it on top of the other one too. So if there's any red flags in any of those claims that come in that aren't really being scrutinized and maybe being automated, that would come to us. The second thing is, and I cringed when I heard the word ACH, because we do it. We're much like Jeanette's organization, that we prefer, and our folks tend to prefer checks. On occasion, we've made exceptions and we've done some ACHs, and one specific one, which I could probably speak for the next 3 hours on, it was a hacker hacked into and thus redirected our ACH to the wrong people. And so that's something that is alive and well. That's going on. There's big business out there of people getting in and redirecting electronic payments. So yeah, to answer your question, if something gets automated and then something gets electronically delivered, we're going to raise an eyebrow and say we want to make sure we know everything's going on before this money goes out of our pocket.
Thanks, Jeffrey. And I suspect on top of all of that, since it's long been understood that the fraudulent payment prevented before it's made is much more valuable than the one identified after it's made, and given the speed of electronic payment, that might up the ante on that subject. Got another question here, and it was inevitable that we were going to get a COVID question, and we have one, and we're probably going to ask everybody to comment. So, due to COVID or coronary virus, do we expect a disruption in the insurance industry's ability to assess risk and therefore the ability to investigate claims, leading to more flexible policy wording and less exclusions? That is a wide open question, and I will invite anybody who'd like to step up and answer to do so.
Wow. I mean, what the debate you're hearing right now is, some of you probably know that several members of Congress wrote a letter to the insurance industry, or more around business interruption insurance, asking insurers to potentially pay claims that contractually they're not obligated to do. And as an industry, I know when I'm looking at the associations, they're saying, no, that's not how this works. So it's going to be interesting. I don't think I have the answer. This is all fast developing, but it is going to be interesting to see how the industry responds to the pressures and moving forward. I mean, we're always assessing risk. Pandemic has been on the radar of risk for many insurance companies that I know of. So I don't know that I have a good answer for that.
Okay, well, thank you. Go ahead. Next speaker. Who is that? Oh, I thought I heard somebody offering a comment.
Stephen, this is Jeff. I could just throw something real quick out there, since Jeanette mentioned the business interruption. From a fraud perspective, we've already talked about it in the industry and internally, that yes, carriers are being asked to do things that they may not be contractually obligated to do under their business interruption coverage, and some carriers are going to push back and say, no, we priced it, we did it that way for that reason, and that's why it's an exclusion. I think from a fraud perspective, what you're going to see is when people are told that, and they're in the predicament that they're in, you could potentially see another fact pattern arise to try to make whatever didn't get paid under BI under something else. just a perspective to see that people are going to be in a tight spot. We're there to help them. They're going to be told on some occasions that we can't help you in this issue. They may seek other alternative methods to get paid, and it may be in the form of a fraudulent claim.
Good point. Good cautionary point. Thank you. We've got about 5 minutes left. I want to be respectful of everybody's time. And while we're on the subject of COVID-19, although this is a claims-based webinar, I'd like to ask everybody as a final question, I think, what, if any, has been the most immediate impact of the virus and the resulting shutdowns and work from homes, et cetera, on your, personal responsibilities in your organization and in the processing of claims and the flow of claims information. And again, for no particular reason, I'll just start with Kedar to see what your response would be.
Yeah, sure. Thanks for that. I think in terms of being able to service our clients, a lot of the times being consultants, we're virtual with our clients anyway. I think the biggest change for us has been maybe looking at the programs that we're working on with our clients today and thinking about how we can execute them in a more virtual fashion, which can still continue, but more importantly than that, helping them start to accelerate the journey towards digital adoption. Some of the things I mentioned early on were around video ethanol and things like that, which were fun science projects for a lot of insurers, but they're almost mandatory and may continue to be mandatory for a period of time going forward. And so I think it's the conversation shifting from, okay, it's always better to have the adjuster to, okay, now I can't. What is it that I'm going to do to get as good information as I can? And I think that's the biggest shift.
Thank you. Don, what about you and Mass Mutual claims?
Yeah, well, I will tell you, I think, this recent pandemic has really stretched not only our country, the world, but also our industry to, varying degrees. For us, it's been about executing our business continuity plan, as I'm sure for many companies on the phone here in the webinar and beyond. And for us, it's just been about executing that business continuity plan to the greatest extent possible, where we can be as business as usual as to the greatest extent possible. So we've been trying to execute that. From our perspective, insurance operations, from a Mass Mutual perspective, from a claims perspective, it's gone, knock on wood, relatively well. I mean, we've had some hiccups, we've had some challenges, obviously, but it's just been a massive cross coordination in terms of that executing that business continuity plan, not only within the company, but also with our business partners, the vendors that we use, and just a cross section of folks that we tend to rely on to service our customers. So it's been a massive undertaking. And, when you go from, having 7,500 folks at Mass Mutual, give or take a few, and just having everybody 100% working from home, and all of the technical capabilities that you have to rely on, all of the, internal resources you need to rely on, and external resources, it's just been really, really huge. And I'm sure everybody's probably feeling that. So for us, it's just been about really executing that plan, and also having the agility to adapt our plan as the challenges surface and as the responsibilities just come day to day. But for us, it's just been relatively going well. But, we're taking it day to day. We're having daily calls. We're just trying to, execute our processes and leverage everything that we have in our toolkit to the extent possible, where we can just minimize the disruption to our customers and our business partners, and to ourselves, our associates. So it's been a huge deal.
Thank you so much. Jeanette, in a few words, is it business as usual at Texas Mutual?
Yeah, luckily we had gone several years ago to a 2-day work at home for our adjusters, our underwriters, a lot of our folks. So we had practice. We knew how to do it. Our call center as well. So when we made the call to go work from home two weeks ago, it went very smoothly, and the rest of us, I think our adjusters, they're like, yeah, we've known how to do this forever. It's funny. It's more the management team and the folks that normally don't do it. We're adapting using tools, video conferencing, all of that.
Thank you so much, Jeffrey. Any comments? I know we're moving into overtime here, but any final comments from you?
Just the only comment would be that there's no, you can't replace an in-person interview, and obviously we're not doing any of those now. So, when you're talking about a complex fraud issue, you want to be sitting across from somebody, not generally on the phone. So what that's created is we're not going to vendor something out to a vendor who's just going to call somebody. We're just going to call them ourselves. So I think the biggest thing is that we've transitioned to doing either video interviews or phone interviews, and I think it takes a little bit of the teeth out of what we're trying to do from an SIU perspective, but we just got to adapt and push forward.
Thank you very much. I'd like to offer a virtual round of applause for our panelists and for all the great conversation. I'm sorry to those questions that didn't get answered, but most importantly, I look forward to seeing everybody here on this call at Connected Claims USA, June 24th, 25th in Chicago, where we can shake some human hands. Thanks, everybody. Be safe, be well. Talk to you all soon.